This is a market review for February 4th, 2025. We had a bullish close day with a huge sell side wick here, which all happened in PM session, early PM session actually, which we'll get down to later. Um, Again, here we are. I lied. This is New York opening gap. Here we are Tuesday. All right, so this is it. Market opened here, and then we dragged all the way down to there. So 300 points, 350 for a sell side wick. I'll talk about my bias on the 15 because it's easier to see there, but I was bullish today due to what London did overnight. We have this hourly fair value up here, this high between these two, the low of this candle. I know it says 15, but trust me, it is a 15, which I'll get to right now. But this is an hourly as well. So lunch reversed, tapped internal liquidity there, and then continued higher. Oh, no, not here. Another thing that I was looking for early AM session was this fair value up here was validated with this candle here, these wicks, constant encroachment, both of them, right? So it's validated. So that means if price breaks above it and I am bullish, I'm expecting price to come back and revisit this and that it will hold and that it does. These numbers are kind of in the way, but that looks like constant encroachment to me. 15. So I was bullish today, primarily because of this. London opened, went downwards, and then reversed to play bullish, right? I just started here, kind of went horizontal for a bit, dove down, retraced up, and then meandered our way higher. Was it fast? No, but it happened. We went from bear to bullish in London, which gave me bullish bias. That on top of the weekly, right? It's Wednesday. We should be an expansionary day. On top of this hourly here getting invalidated with the closures above here, which then caused me to want to see price come back down into this before market open. I'll get down to this. I think it's a 5 minute, but market opened. We expanded higher. Took out well, a PM session for today's high. Then we stopped in our tracks on this first presentation, January 21st, as well as this new day opening gap high. And then lunch, we reversed down to this 15-minute fair value, which is also an hourly high here, which is what I was looking at. I didn't enter because I was on my way to class, but I did place down a marker here to keep it as a, I don't know how to say it, to remember. I don't know. Yeah, something like that. And then after we hit this 15-minute, we started playing bullish again. Algorithm kicks back in. We take out internal sell side and expand higher. Fail to take out this high, which is an SMT. And then we come down and then create this high, just still lower than this, but higher than this. And this is an SMT. A lot of SMTs today in the afternoon. And then we meandered down to close the day. Now, 5 minute, we can see this here, the hourly candle closed here, right? And then a candle opened, wicked down into this 5 minute, expanded higher, and in the macro, you hit this, and continued expanding There's this 5 minute here that pushed price up as we neared our destination of this negative gap. Hit that, lunge reverses, come down. There's this 5 minute inverse here, which is validated, in my opinion, from this. If you look at this candle, this wick right here, comes down into it and rejects off of it. So that is validated, in my opinion. And then once we break past it, price is likely to come back up to it. Look at that constant encroachment right there, which is also inside of 1 minute. We expand lower, tapping this 15 minute. And once we reach that, that's our goal. We continue our work higher again. Again, 5 minute inverse validated with this rejection here, broke above it, using it again, closures on constant encroachment, 5 minute VISI, expansion, SMT of these highs, causes us to retrace, taking out this low. And then we can try one more time. We take out this high, with this high, but not this one, which is another SMT, and then price falls lower, close for the day. On the 1 minute, I had some questions while I was watching price. Right, so again, London, London bearish, switch to bullish, which means New York should continue that. 1 hour inverse here, price came down and then expanded. What I didn't know here is why we took off at 8:30 or close to. Now, reason number one is because from 9 to 9:30, price was clean. Now, this might not look clean to some of you. However, well, volume bounce right there, perfect closure. The high of this candle up here, sorry, the high, the close is 436.75. The close of this candle, 436.75. Perfect. Expand higher, perfect. Boom, down, good. Closure below this candle, order block comes up into it, down, fair value gap right here with this candle, lower, taps into this 5 minute rejection off that, right? There's still aspects of clean price action. It's moving, right? It's fluid and it's using these things. So reason number one. Reason number two, 15 minute. This bullish price leg, all balanced. There's no inefficiency on efficiency. There's no gap. There's no nothing below this hourly and this 5 minute here. Right? There's no gap, and if there's this gap, let's use 1, 2, 3 times. That's pretty balanced in my opinion. There's nothing else lower than that. We come back down to the 1 minute. Right? Now, there was no news before 10 o'clock. Right? So that immediately told me that I'm not taking a trade before 10. 8:30 hit, spike down, tapping this 5 minute, closure above it, pushed higher. First presentation, come back down to it, failed to even touch it, and then we expand higher, right? Which answers this question. What made this not want to go lower? Now, in all honesty, I don't know what made it not want to go lower, but I can see why. I can see signs that it won't. One of them being this right here. The fact that price was too strong to even come back to this tells me that price is unlikely to have a big retrace off of just this liquidity here. Well, because it's either this one or this one. If this was a string of fair value gaps, okay, it would be more understandable. But it's either this one or this one, which the price already proved it's too strong for. So this could have been an entry, constant encroachment, 75% here. This could have been an entry, well, not for my model, but this could have been an entry for someone. Move starts in the macro. You got another one here. Wicks do the damage. But if we look, I lied. If wicks do the damage, however, look at the bodies. Closing 25%, opening 50%. Now this SMT here is just something I saw to signal a retrace. That's all that is. So constant encroachment closures within the macro. Again, could have been a pyramid. But this right here was, in my opinion, the only entry you could take for the morning. And with my rules, didn't want to take a trade before news. Another thing to notice, price went pretty horizontal here. My guess is because it's waiting for this macro, right? So that means that it's okay to take a trade there. It's okay to take a trade before a macro. Just expect quick price action once the macro hits. So macro hits, we push higher, higher, higher. I think there's, well, we took out this liquidity. That's pretty far away. So we start reversing. We have an SMT between these two highs here. Retrace, constant encroachment closures, dip into this 5-minute there, expand higher, and then we start kind of, in my opinion, when I saw this, huge leg up at the end of the macro, right? We've moved 250 handles, maybe even 270 at this point, all in the span of 40 minutes. Price needs a break, right? So it goes horizontal. I thought it would go horizontal until 45, where it would pump a little higher, but it ended up going pretty horizontal until lunch. Right, so it looks like the goal for AM session was this new day opening gap high. Speaking of lunch, we have an SMT here. This high was higher on ES than this one, but on NQ, the right one was higher. So when I saw this SMT here, bearish expansion, I saw this value gap. I placed this. Place this right there, put my stop above this candle because that I want to allow price to come up here. I'm going to put my stop at this low right there. Now it would have taken time, but it would have hit. Right? I don't think I would have put profits. This is a 1 to 2.7. Probably wouldn't put profits. Just one single trade, which I might do because at this time I'm on my way to class, boarding class. What I might do at these times is look at the market. By these times, I mean high probability times that market is to have a big move. So lunch closure, market open after lunch, so 1:30. Because like I said, those are times where market has a higher probability of producing a model. Exhibit A. I read SMT, bearish expansion, inefficiency, enter on the bottom of the inefficiency, target liquidity. So what I would have done in this sense is just take a one contract sell here in order to hit. So it's one of those things where it's either enter and I don't look because I'm obviously in class and it either hits my stop loss or my take profit. So we meander around for a bit and then we really take off. Tap into this 15-minute and this 1 hour high, which are both the same thing. This purple line right there and this 15-minute right there. Tap into that, and then we continue our bullet move. So target for AM session, new day opening gap high. Target for lunch, 15-minute for value, and the hourly. Target for PM session was these highs. We failed once here when ES made it, so that triggered a, a retrace. Took out this low again during the macro. S&T here. I mean, there's plenty of fair value gaps to take, but why would we take this one? Well, because it's in the macro. I'm not confident enough in PM session stuff to take a trade like this right here. I need a little more support from the macro stuff again, which is exactly where this is. Boom. Slap in the middle right there. Now this could be a new model. This could be a PM session model. A rate on the opposing liquidity before a continuation of the bullish trend, or sorry, continuation of the bias in the trend of the morning session, which in this case would be bullish. Get a rate here. Technically an inverse fair value gap here I could have entered on. Could have been used to enter, but it wasn't validated. So it's a little iffy. But nonetheless, just yapping at this point. Possible model. PM session. Again, took out stops, tried one more time, took out this high, but not this one. Unfortunately, yes, did not take out this high. So another SMT causes us to fall down. Usually last hour of trading takes out any unopposed liquidity or untouched. And my thought is we just took out sell side literally a minute before 2. Or sorry, 3. So what do we want? We want buys. So we go seek those, and then 4 o'clock hits. We're bullish, so what do we need to do? We need to fall off that high to close. I believe we closed here. Right there. So we closed here, a little off the high of the day. As far as Wednesday, sorry, I said today was Wednesday earlier, didn't I? Oh, geez. Today is Tuesday, which with this big sell side wick on Monday and the super discounted opening range. Sorry, not opening range gap. Week opening gap. I was expecting bullish price action for the whole week, which is playing out. Now, like I said earlier, Wednesday is usually an expansionary day. I don't like how big of a gap we have here. I don't like it. I want to see a body close above it or like over it. However, Wednesday, like I said, usually an expansionary day. I think closing over this might be like sometime down the road type of thing, or not at all, right? Just because I would like it to close doesn't mean that it necessarily has to. So again, to continue the weekly trend, I would like to play bullish tomorrow. I'm looking for here at relatively equal lows. I think they're close enough. Might be actually equal. 55, 50, 50. Yeah, those are equal. I'm expecting these to get rated tonight. Hourly fair value here. Maybe get supported off this new week opening gap. And London session might again reverse from bearish to bullish, or just plays bearish and then New York plays bullish. I'm looking for New York to play bullish tomorrow. However, that can change depending on Asian and London session. But as of now, Quilter highs, target for tomorrow. Possible target is up here. That's if we get a huge stretch. Tomorrow is the last day that I'm looking to enter for the week. because of NFP on Thursday or Friday. I'm taking a step back and just observing until I feel confident in my ability to predict those conditions. So this has been your market review for February 4th. Right.